guys, I'm going to be showing you some of my favorite candle tips when it comes to trading. This is going to be more of an intermediate video if you already understand candles, but I'm going to be showing you some things that I look for when I am getting into my trades. So first and foremost, I am first going to hide my indicators. Now, the indicators that I currently have on my chart are two EMAs. I have a momentum indicator, and I also have the stochastic down here at the bottom. So if you want to know more information about the strategy that I use to be profitable on a consistent basis, you can check out any of my other videos on any of my other Forex playlists. But for now, I'm just going to hide this because we don't really need them. We're just going to be focusing on the candles. So the candles are the things that we see here on the chart. And you'll notice whether you're beginner, intermediate, the candles will be one of two colors, right? You'll get a red candle telling you that the market is currently selling for that period of time, or you'll get a green candle letting you know that the market is buying for that period of time. Now, if you get a series of red candles, this is called a downtrend. It means that price started up here and then price sold until a certain point. And again, if you get a series of green candles, even if you do see some red candles in between, right, this is letting you know that this is an uptrend and price is continuing to go higher and higher. Now, even though these candles are pretty simple and straightforward looking at them, they're actually going to tell you a lot of information about the price. So I'm just going to try to come in here and zoom in as much as I could so we can really get a good green candle and a good red candle, so I can tell you the four things that a candle is going to tell you. And this is actually the perfect little setup. So I'm just going to use a rectangle and I'm going to highlight this area right here. Let me go ahead and turn that. All right. And we're only going to focus on these two candles for now. I don't think I can zoom in anymore. Okay, I can. There we go. All right. Now it's going to be these little wicks that I'm going to show you are going to be small. So just make sure that you are able to see what I'm talking about. So the red candle, right? Let's start with the red candle. The red candle is a sell candle. And again, the candles are going to tell you four things about the price for that period of time. Now, based on my background stamp right here, you can see that I'm looking at my chart on M30, which means that one of these candles are going to be forming every 30 minutes. So these two candles equal an hour. But for now, we're going to focus on one at a time. So the red candle, first and foremost, is telling you that the market is in a bearish trend. It's letting you know that sellers started to sell up here and then they ended somewhere down here. Now, with a red candle, your opening price is going to be at the top, right? It's going to be here. That's our open. And we can tell because we know that sell candles start at the top and price is going down. Now, where you see the other flat bottom here, right? This is our close. So price opened here and the sellers were able to get the price all the way down here for this period of time. Now you're going to notice this little stick peeking out of the candle, right? Now, no matter whether it's a buy or a sell candle, that wick is going to tell you the high, and then the bottom wick is going to tell you the low. So this means that for this time period, that little wick, that's the highest that price got, and that's the lowest that price got. Now let's focus on our buy candle, right? Because it's also going to tell us the same four things. But in this case, if we're going for a buy, which means that price is going up, our open is going to be at the bottom, right? The flat side of the candle is going to be where price opened. We can see that the buyers were able to get the price all the way up here, right? So this flat top is where price closed. This little teeny wick, right, that we see sticking out of the candle is going to be the highest place that price went for this time period. And this little wick right there, right, that's going to be the lowest place that price went for that time period. So the only real difference with a green candle and a red candle, if you're just doing a glance, you're going to know that this is going to be your open and this is going to be your close. And for the green candle, your open is going to be at the bottom and your close is going to be at the top. Your high and low are pretty much the same for both candles. So that's the first thing we need to know, is that the candles are telling us so much information. Now, I know when a lot of people are trading, you ask yourself, when I'm setting my entry point, do I use the body of the candle or do I use the wick? And you just really have to learn to use discretion. But I tend to set my stop losses and my take profits a little bit above the wick or a little bit below the wick, depending on which trade idea I'm taking. And that's simply because I want to decrease my chances of getting stopped out of my trades. If I know that above the wick is the highest high and I'm going for a sale, right? I just want to set my stop loss a little bit above that price, just in case the market decides to revisit that area. I don't want to get stopped out once that move happens. Now, I'm going to tell you guys another trick and tip that I really, really, really love about candles, because the information, it's like the more you know, the more straightforward it becomes and the easier it will become for you to take your trade ideas and to be more profitable. So again, we just talked about the wicks, telling you what the highest high is and what the lowest low is. Now, if you were to get into a trade, right, let's just say we were potentially trying to figure out if we should enter here for a sell, right? So the first thing that we notice is this candle and this candle have equal highs, right? We were coming off of a nice uptrend for some time. We see that the market hit a resistance, right? Creating equal highs. And then the market decided to push down, right? So once you start to see those equal highs, and this is for a sell, guys, once you start to see those equal highs appearing above the candle, that's going to help you create a bias in your mind to let you know that the market may be going for a sell, right? So I'm just going to scroll back and show you guys some other examples of this. And if you want an in-depth description of learning about the wicks and how to use them for entry points and how to profit off of these liquidity grabs, you can watch my video on liquidity. There's a part 1 and a part 2, right? So here's another example. We see that the market was coming off of a minor uptrend. How do we know? We see more green candles than red candles, and we see that the shape is basically an upslant. Now, when it comes to this area, we have equal highs, right? Whenever you start to see some equal highs and it's coming off of an uptrend, that's going to confirm that the market is going to turn around. So that's something you want to look for. And the more you trade and the more that you're in the markets, the more you're going to start to notice these wicks and these liquidity grabs, and it's really going to help you become a better trader. Now let's look at the sell example. We can see that the market, right? Let's just do both, and I'll change the color of my pencil so that it makes more sense. We can see that this market was on an uptrend, right? We can see that it started to hit some equal highs. And then that's actually when the trend changed, right? We got those equal highs and lows. So I'll put a green line and a red line. And then the trend changed to a selling trend, right? And we had a selling trend for some time until, guys, what happened? We found some more equal lows at the bottom, letting us know that the market was now ready to get back into an uptrend. Now, this is something that I want you to back test. I want you to try it out. I really want you to practice, simply because the more you do that, again, the more you will realize that this is true. So I'm going to give you guys some more examples, and we will start right here, right? So we're going to do a downtrend example, right? So we can see that the market was coming off of an uptrend, right? We see that the market was an uptrend. Now, look at this, guys. We see all of these equal highs, right? We see a little bit more of a push up. We see all of these equal highs. And once you start to see those equal highs, or you start to see more wicks peeking up, it's typically going to be about 2 to 3 wicks. And on the 4th wick, that's when I will feel confident to take the trade. But again, we see those equal highs, and then we can see this selling trend that happened. So that would have been a nice profitable trade. And then again, just on the flip side, coming off of a selling trend, we see equal lows. Then we see a great push up on this green candle. Now let's see if we scroll to the side, are we going to get more of a buying trend, right? Yeah, so we had a little bit, right? a little bit of a minor buying trend here. What happened? Equal highs, selling trend, right? What happened? Equal lows, buying trend, right? So that's just something that I want you guys to look out for when it comes to candles. And that's one of the tips that I use when I'm getting into my trades, equal highs and lows, right? Equal highs and lows. Now, another tip that I will give you guys about candles, especially when it comes to those wicks is, and this may be a little confusing at first, guys, but I promise the more you practice, the less confusing it'll be. So remember, once we start to see these wicks, right, we want to get at least 2 wicks on the 3rd wick or the 4th wick, right, depending on how strong the trend of reversal is setting up to be. You'll see, again, the wicks are telling you that price is resisting, right? Not that price doesn't want to go any higher, but price is resisting going any higher, right? It's a stretch. Imagine these are arms, right? And that's a stretch. But imagine these are arms and they're reaching up, right? The arms are up, they're reaching. Price wants to go higher, but it's having a really long time, right? So the wicks really, no matter whether they're at the bottom or whether they're at the top, they're telling you that there is some resistance, but the market wants to continue to go in that area. So for example, we can see that the market was on this minor small uptrend. It was going up and it really wanted to continue to go up. And we know this because of the wicks, right? The wicks are highlighting that resistance, and it's saying that although it wants to go up, it may be hard and it actually may be unlikely. Once you start to add in your other indicators, like your stochastic, your MOM, your EMAs, you'll have more information to create more of a bias to whether you should buy or sell. But I'm saying all that to say is the wicks show resistance, right? So when you get a candle with a small wick, right, or a flat top, that's actually confirming the trend because it's not reaching. So imagine the wicks are, your hands are reaching up, right? You're really reaching, you're trying to get something. And imagine a flat top, and this is for a sell right now, guys, for a flat top, right? Or the flatter the top, the stronger the trend is going to go in that direction, right? I'm saying all that just to say this. Wicks are resistance with the potential to go higher, right? And this is for a sell. A flat top red candle, right? The flatter the top confirms that we're not reaching any higher, right? The sellers have taken control of the market. They're not interested in pushing the price any higher, right? They're okay, right? Remember, open, close, high, low. They're okay with opening the price right here and not getting any higher than that. So that's something you're going to want to look out for when you're taking those trades, are those flat tops for the sell and the flat bottom for the buy. And I'm going to give you guys a buy example as well. So look right here, guys. Let's just focus on this little section right here until we get to this candle, right? So we can see that the market was wicky, right? We see those equal lows. Let me put this a little higher. We see those equal lows being created. So we know that the market wants to turn around and go up, right? But we also know based on the wicks that it has no problem going down. It's not until we get a flat bottom, because remember, buy candles open at the bottom, guys. It's not until we get that flat bottom candle. And I'll just add my indicators back. So we're going to look at this candle. And on this candle, I'm expecting it to either be above my EMAs, one or both, or crossing. And I'm also expecting my momentum line to be facing up or above 0, and my stochastic to indicate those confirmations for a buy as well. So let's turn our indicators back on. I'm not sure why they're not showing, so let me go ahead and refresh my page. And let me delete this drawing, y'all, because we got to find our candle again. Let's find our candle. Well, it really works with any flat bottom candle, so I'll just do this candle, right? So we can see, again, our confirmation for a buy, our MOM is above 0 and facing up. Our stochastic is facing up, right? And the blue is above the orange, giving those confirmations for a sell. Mixed with the flat bottom green candle tells us that the market is going to go in that direction. There's no resistance and yeah, all of that good stuff. So let's do another example, right? Because back testing is extremely important. And again, I recommend you guys watch my back testing your strategy video so that you can see we're not making this up, right? We're not making this up. So let's look right here. If we were going to go into this trade for a sell and we were analyzing this trade for a sell, the first thing, and our indicators are back, right? Oh, let's put our EMAs back too to really test it out. So here was our buy example. Let me just circle it right there. And we can see it crossed above the EMA, confirmation, broke structure, right? We just talked about that in our previous video. It broke structure from here, confirmation, above 0, facing up, above 0, facing up. All those great things are for a buy, right? Now let's look over here and we're going to look at our sell example. So we see our liquidity, right? We see our resistance, right? It's happening up here, right? Then we see the flat top, right? We see the candle top starting to get flat. Boom. Not only that, it has crossed under both of our EMAs, confirming that trend for a sell. Boom. Not only that, our MOM is facing down, right? And it's actually crossed below 0, right? On that candle, right? Boom. Stochastic facing down. Not only is the stochastic facing down, but the orange is above the blue, and it's also below 50. So boom. All that would say this is a great trade idea for a sell, and we would count our pips, right, from our flat candle entry, and we would be able to get about 50 pips in 6 hours, which really isn't bad at all based on the risk that you're taking. So I'm just going to show you guys one more example for a buy and one more example for a sell, and then we're going to pack it up. We're going to pack it up, right? So we can actually come down here for this one, right? So let's say we see our liquidity, right? We see that we starting to get those equal highs for our sell. Not only that, right? That's one thing. Not only that, our candles has crossed below both EMAs, right? That's another great entry signal, which we'll probably talk about in another video, right? So that's 2 confirmations for a sell. Not only that, we're looking at our flat top candle. You can use this one or this one, right? But the crossover is a great entry signal. So not only that, we see our momentum facing down and below 0. Boom. And we see the orange over the blue facing down below 50. Boom, boom, boom. All those great things for a sell. And again, we could have stayed in this trade from here to we get those equal lows, right? And it would have took some time, right? 2 days, right, for 51 pips. But if you're using a standard lot size and you can make $500 in 2 days just from clicking a button on your phone, right? Whether you're at home, at work, at the grocery store, on vacation, right, with your children, with your spouse, that's a pretty good return on your investment. So one more buy example, guys, and then we are going to pack it up, right? And this will really help you. Like going forward, this will really help you. All you have to do is put together what you know about Forex fundamentals, put that together with your indicators, whichever indicators you feel comfortable using. And then I think it's really important to have a really great candle, right? Or a couple of different candle types or things that you can identify, right? That's going to help you be a better trader. So let's look at this, right? Let's look right here. So we have, well, we can start down here actually when the crossover happened, but right now we're looking for a flat bottom candle. So let's just say we were, let me back it up a little bit. Let me back it up, my friends. All right. Let's put the replay on and we're going to go right here a little bit more. Sorry, y'all, my computer froze for a second. I want to exit replay mode and we're going to try this again. And we're going to go right there. So let's just say we were in the market at this time and we would have seen that we had a flat bottom green candle, right? We would have said, okay, my candle got a flat bottom. That means that there's no back and forth between the sellers, right? It means that the sellers are probably running out of momentum, right? We also have this is a little questionable because it's not quite facing up, but it is on the zero line. And although we do have our stochastic that is overbought, trade what you see, not what you want, right? And not only that, our candle is above both EMAs. So we have 5 confirmations for a buy. And we're going to go ahead and press play to see what happens. And again, let me just circle this candle with a actual tool. All right, we're going to focus on this candle right there. Actually, let me use a line. Vertical line, focus on that candle. And I'm just going to press play and we're going to see if it goes up. And it does, right? Now, I know you guys were getting a little nervous, right? Because of that high wick that was on that candle, but don't let that scare you, right? The flat bottom tells us more than that wick does. And as we can look, we'll see. Oh, the market's done. It's where it currently is right now. So yeah, guys, that's what I really wanted to show you all about candles. Those are some of the tips and tricks that I use when I'm getting into my trades. If my candle has a flat top for a sell, I feel a little bit more confident getting in because I know there's not any rah-rah happening. And I know that, yeah, I have a better potential to clear that trade because there's no back and forth. The seller said, this is where we're starting the price and we're going from there. Just like if I see a flat bottom, look at this perfect trade, guys. We have equal bottoms, right? Equal bottoms. We have a green candle crossing above both EMAs. That crossover is another great entry signal, right? We have our MOM above zero, stochastic above, right? And it looks like it's oversold. And that's really the gag, y'all. It looks like it's oversold, but look how long it continued to buy, right? Look how long it actually continued to buy. So that's really all I have for you today, rich friends. I really just wanted to give you guys some candle tips.